Hello, guys. Welcome to the channel where we try to simplify learning as much as possible. Like I promised in the previous video, I'm going to be sharing courses that I paid huge amount of money to buy. Okay, courses like the BTMM, ICT, price action, and the rest. Okay, I'll be sharing them with you free of charge. So just hit the subscribe button and turn on the notification bell so you get notified each time a new video is added. Because I don't necessarily believe that everyone has got to pass through the same stress of uh, paying this amount of money, getting this and all of that to learn how to trade like I did. Okay, I actually went through a lot of stress, different mentors, different payments, different courses, and all of that before I was finally able to be profitable. Now, let's dive into today's video. I want to explain the basics you need to know about the Forex market as a trader. Okay, the usage of indicators and the rest to make money is fine. However, you also need to be able to explain to somebody what the forex market is all about. A lot of people have no idea, absolutely no idea what they're talking about. They just know that you click a buy, you click a sell, and then that's all. Okay, so Forex is actually an acronym for foreign exchange. Okay, the Forex market is a market in which a country's currency is traded for the currency of another country at a rate agreed by both parties. Okay, so um, the Forex market is the largest market in the world. Okay, it has a daily turnover of about $7.5 trillion. Now, this is actually according to the 2019 triennial central bank. Okay, as compared to the $1.9 trillion that the turnover was in 2004. Okay, so you can see that the market is seriously growing. I mean, you there is money for everybody. The money is available for every single person to get. Okay. Now, Forex is quoted in currency pairs. Okay. For example, we have the Euro USD, GBP USD, CAD JPY, NZD, CHF, GBP, AUD. Okay, these different terms, okay, these different symbols, these pairs, they actually represent the currencies of different countries. Like the euro here represents the euro, EUR represents the euro, USD represents the United States dollars, GBP represents the Great Britain pounds, USD, of course, I've talked about it. Then the CAD here, the card, is actually the Canadian dollars, while the JPY represents the Japanese yen, the NZD represents the New Zealand dollar, the CHF represents the Swiss franc for Switzerland, the GBP, of course, you already know that, Great Britain pound, while the AUD represents the Aussie dollar, the Australian dollars. Okay, so we have a lot of them. Okay, a lot of them. These are just a cross section of the major pairs we trade in forex, and now they are quoted in four decimals. Okay, they're quoted in four decimal places. So let's say the GBP USD market price, okay, might be at a point 1.204, 1.2405. Okay, so that's how it's quoted. You see things like 1.2405. Of course, you might see a fifth one. We're going to get to that shortly. Okay, it's actually called a fractional pip. This subscript 3 there is a fractional pip. We're going to get to that later. But so that's it. It's quoted in four decimal places. Then this is actually apart from the Japanese yen pairs, okay, that are quoted in two decimal places. Like you can see here, the USD JPY is quoted in two decimal places. Okay, so that's basically what you get to see. Okay, and yeah, let's move on to the next slide. So, what's the significance or meaning of these numbers? Now, the meaning of these numbers, the GBP is the base currency while the USD is the quote currency. Okay. The GBP is the base currency, the USD is the quote currency. So when we say the GBP USD market is at a point 1.2403, okay, what does it mean? Okay. It means that one GBP, okay, one Great Britain pound is equivalent to 1.2404 USD at that particular time. Sorry, actually 1.2. There's an error there. 1.2404 USD at that particular time. That means for every £1 I want to buy, I would have to pay 1.2404 USD. Okay. And if I want to sell £1, then I would receive 1.2404 USD. I don't know if that's clear enough. So basically, the GBP, like I said, is the base currency, while the USD is the quote currency. Okay, the base currency always have a value of 1. Okay, so 1 GBP is equivalent to 1.2404. Now think about it. It's called foreign exchange. Foreign exchange. So it's an exchange. Just like wherever you're watching from, you have your country's currency. Okay, like me, I'm a Nigerian. Okay, so um if I want to change $1 right now in my country, I'm going to have to get that's about 1,500 naira. You see, please don't laugh at our currency, but that's what it is. It is what it is, actually. Okay, so that's it. We're talking about foreign exchange here. So if I want to pay, if I would have to pay 1.240 for US dollars if I want to sell £1, then I will receive that. So that's it. Then the USD is the base currency, while the JPY is the quote currency. That's when we're looking at the USD JPY. Okay, so it's the same explanation. The same explanation. Now, what's a pip? A pip is actually the smallest whole unit measurement of the difference between the bid and the ask spread in a foreign exchange quote. Okay, it can also be defined as the unit of measurement to express the change in value between two currencies. A pip is actually the is an acronym for price interest point. Okay, so PIP. Now the GBP USD, let's say it's at a market price of 1.2405. Okay, when the market moves from 1.2405 to 1.2406, we say that the GBP USD has moved by 1 pip. If it moves from 1.2405 to 1.2, sorry, it moves to 1.2415, we say it has moved 10 pips. Okay, so the subscript is called the fractional pip and it's negligible. So that's what I was trying to say before. This subscript here, the 3 you're seeing underneath here, okay, it doesn't necessarily have to be 3. It could be any number: 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so whatever the number is actually negligible because it's a fraction. Okay, so it's so minute, so much so that we can neglect it. Okay, so a pip is simply 0.001 and 0.01 for the JPY pairs. You remember the explanation? Like I said, this is if GBP USD moves from 1.2405 to 1.2406, okay, it has moved 1 pip. Then for the JPY pairs, we said there are 2 decimal places, so you already understand that. I'm sure it's clear enough. Then talking about the contract lot sizes. Now, a standard lot in Forex is actually equal to 100,000 currency units. Okay, it is the standard unit for traders. Okay, whether they are independent traders or institutional traders. Okay, one standard lot is actually 100,000 of the base currency. And that means when you buy one standard lot of GBP USD, you're buying £100,000 with US dollars. Okay, now I'm sure you must have been wondering, what's the catch in Forex? What's the catch in Forex? Why is everybody talking about Forex? Everybody's Forex, 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 Forex. Yes, it's simply, we're all talking about it because of things like this, okay, standard lots, because of things like the lot sizes and also the leverage that you're going to hear about, okay. What it simply means is that with just a little amount of money, I can invest and then I make a huge amount of profit. Okay, so that's why everybody is talking about it. Everybody wants to delve into it. Okay, so it's a very, very profitable venture if you do it the right way, if you know what you're doing. Okay, so other lot sizes include, we have the mini lot, the micro lots, and the rest. Okay, so all these are things that you you use all these lot sizes. There are sizes that you use in your account depending on how much you have in your trading account. Okay, so I usually advise people, if you're using $100, if you have $100 account, then it's best for you to start trading with 0.01, okay, as your lot size. If you're using a $1,000 account, it's best to start trading with zero point 0.1. If you're using a $10,000 account, then that's when we can confidently say, okay, you can try out a standard lot. Okay, so basically, the essence of this is to also help you manage your risk and all of that. Okay, and keep you in the market, because the essence is for you to be in the market for as long as possible, so that should there be any form of losses that you've made along the line, your profits will be able to wipe them off. Okay. Now, how do we calculate profits and losses in Forex? So, the profits and losses is just a simple explanation. We have what we call the number of lots. Okay, I've already explained what lots are. The number of lots times the number of pips. You already know what pips are. Times the dollar value per pip for each standard lot. Okay, that's how we calculate. What is the dollar value for each standard lot? What do we mean when we talk about that? The dollar value for each standard lot is simply talking about the cost of each pip movement when using a standard lot. Okay, the cost of each pip movement. So when the market moves, like I explained the other time, when it moves from, let's say, 1.2405 to 1.2406, that's a one pip movement. There's actually a change in price. There's a change in price. Okay, so that particular stuff is what we're talking about. If you're using a one standard lot, okay, it's going to be, I think for most of them, it's actually like $10 or so for a standard lot of a pip movement. So that's it. Now we have the leverage. Now, what does leverage mean? Leverage simply means using other people's money. Okay, this money is provided by your broker. Okay, different brokers allow for different levels of leverages. So we have leverages like 1:10, 1:20, 1:100, and the rest. We even have as much as 1:2000. So the broker I currently use, okay, XNES, they allow me to use as high as 1:to unlimited and 1:to 2000. Okay, so leverage allows a small account to make a large amount of profit. So this is what I was trying to talk about. This is why you see that everybody wants to go into Forex. Okay, because you're using other people's money, which is provided by the broker, of course. You're using other people's money to trade, okay, and giving you a large volume, okay, and by so doing, you're able to use small amount of money to make so much. It will interest you to know that with as little as $1, okay, you can you can trade with a $1 account. Of course, you can't deposit a $1 in most brokers, okay, but let's say your account, you made losses and all of that, and then it reduced to $1. If you have a very good and profitable strategy and you enter at the right time, you can push that $1 back to, okay, any amount you want. I've done that myself, okay, but that's not the focus here. My focus is not to show you how much I have made in the Forex market, how I have multiplied, like everyone, like most Forex traders do, okay, how they turn $1 to $1 million and all of that. No, that's not the focus. I want to try to, as much as I can, to educate you properly on how to trade the Forex market, and not to make you be under any sort of pressure to try to replicate my own results and the rest. Okay, so that's just that. I believe I believe that you've learned so much already in this very short video. Like I promised, I'm going to be posting the other videos, okay, and I'm going to try to make it as regular as possible. Okay, so thank you so much for watching, and see you in the next video.